This is Robert Kraft, and I'm your host for the SNN Network Virtual Conference. Thank you all for joining us for this panel. If you are listening and tuning in right now, this is the MicroCap Investing Management Comeback Stories panel that's going to be hosted by Soueidan from GeoInvesting.com. Also being featured on this panel today, we have Cameron Watt from Intouch Insights and James Tu from EnergyFocus. Both companies are actually presenting at the event. So after you listen to this later today, you'll be able to, on Wednesday, you'll be able to hear Cameron from Intouch Insights doing a presentation at 10 a.m. Eastern. That's Wednesday, August 5th. And then on Thursday, August 6th, you'll be able to hear James Tu doing a presentation at 11 a.m. Eastern. And I'm looking forward to a great panel. Maj is one of the greatest microcap investors currently in the game right now. And he handpicked this panel to join him today. So with that, Maj, I'm gonna throw it to you.
Thanks, Bobby. And there aren't many of us investors left anyways. That's not really a big deal. There's only like 5 investors left in the microcap space. But I'm glad you did this and put this panel together. And so it's like, I'd just like to give a little background on what this panel is all about and why I invited Cameron and James here. I employ a lot of investment strategies in my stock picking process. I don't just have one way of doing things. Anywhere from momentum to GARP, whatever you want to label it, deep value. I'm willing to look at anything if it fits in one of my scenario buckets. One of my favorite things to do is to take small bets and turnaround stories, and that may eventually become large core holdings if management proves that they can execute their growth plan. And I believe these two companies that we have here today kind of fit some of these qualities I'm looking at. Proven management team. Management team understands the business environment they're operating in, as well as their customers, has actually faced challenges in the past and learned from them and succeeded through them. That gives me a little more confidence that they can meet unforeseen challenges in the future. Best-in-class products, a clean balance sheet or an improved balance sheet, and some skin in the game, which I think both Cameron and James have here. So basically, look, I'm looking for best class, products, being run by a first-class management team, and looking at a story that's kind of misunderstood by investors. That even might look expensive to some people, but that's when you look into the future, and if you can kind of understand where the turnaround stories are going to go, then maybe there's some significant value there. So today we'll be hearing from James Tu of EnergyFocus and Cameron Watt of Intouch Insights. And so let's meet them both now, and we'll just go with a little bit of an introduction. Cameron and James. We'll start with James. Why don't you tell us about your company? Give us a look at your quick pitch, and go from there.
Sure. Thank you much, and it's a real pleasure attending this interesting forum. The EnergyFocus is a leading energy efficiency technology developer focusing on LED lighting. I say that because we fully expect that LED lighting will be expanding from simply lighting to provide more functionalities and applications within the whole building, space. Lighting, we believe, is a perfect hub for building controls, building management, building optimization. So, but we're starting from LED lighting, and the company has a pretty long history being in the lighting industry as a lighting, innovator, starting from fiber optic lighting and going into 2000s, we start getting into LED lighting, and we first, getting into LED lighting with a technology and product partnership with the U.S. Navy. And fast forward today, we are the primary LED lighting provider for the U.S. Navy ships. Our lights are on literally every ships out there, and more than 200 of them. And we provide the majority of the U.S. Navy ships' LED lighting needs. We just announced that over the past few months, we've got the significant amount of new business from the U.S. Navy. But more exciting than that is the commercial space, which is a pretty good timing right now, because after 10 years of commercialization in the LED space. The market is now opening up, and people are very familiar with LED lighting, and the technology possibilities from LED lighting is a lot more. We are promoting this concept of human-centric lighting, which means that lighting is not only about saving energy, giving you light. I mean, if you look at the past, the first 100 years of lighting, artificial lighting history, it started by providing you light, right? And that almost contributed to modern civilization by enabling people to work longer hours, within the space and all that. And then in the past 10 years, really, LED lighting came along and started to improve energy efficiency of lighting against fluorescent and incandescent. What we are seeing in the next 10, 20 years is a vast expansion of the impact and applications of lighting outside of, number one, providing light, and number two, providing energy efficient light, as LED has done over the past 10 years, going into human-centric lighting, which is enabling you to, for example, having the control to change the volume of the light, the lumens of the light, amount of lumens you have anytime with a control, and change the color temperature, that keep you, more alert or calm. And also providing more utilities, say, UV disinfection for the spaces. It's a very timely application for what's going on right now. And, expanding into the whole building IoT space, using light as the central hub for building controls. So we're very excited to be here, and at this time, and being a LED lighting innovator, it's particularly exciting for us to combine all these technologies outside of lighting, in software, electronics, hardware, and everything, to provide an intelligent building hub. That's probably a kind of long background introduction.
If you tell us a few more facts about the company, when were you founded, and the number of employees you have right now, and maybe what your revenues, are kind of tracking at now.
Sure. The company, as I said, was founded in 1986, I would say. It was, it's a long history, but really got into LED lighting in the past, 15 years or so. We have about 55 employees now. We do provide manufacturing services for the U.S. Navy product, for Buy American product. So we do have manufacturing operation here in Soueidan, Ohio, which is 20 minutes southeast of Cleveland.
And your revenue tracking at what right now?
We did about I think $12 million last year. We have been growing, in the first quarter, we grew about 30% over the year ago, and we are forecasting this third quarter, we're gonna be growing about 100%, over 100% year over year.
Thanks, James. So Cameron, let's get into your company, your customer experience management company, and just a brief introduction, your elevator pitch, what you do, and we'll go from there. And again, make sure when you were founded, number of employees, your revenues, and whatever you want to add.
All right, so we were founded in 1992, at the time as Intouch Insight Systems, Inc. And the company actually collected customer surveys on locations, but through kiosks, mobile kiosks that moved around from location to location to location. And if it's hard to think back in history when there was no internet. But in 1992, we didn't have that internet thing. So the company actually moved kiosks around. Bob Evans, for example, was a client, and they would, you'd have a kiosk sit in a lobby for a couple of weeks, and maybe go to another Bob Evans, and it would move around, and people would push on a diode on the top of a kiosk to collect customer satisfaction survey data. The company then went through until 2002 when it went public. Was 2002. Now, full disclosure, I didn't join the company until 2011, so I'm giving you history here that I wasn't part of for the first part. In 2002, they went public, and at the time, the founder seemed to have gone doubling down into the hardware and into the kiosk and into the market they're already in. The internet came along, and made customer satisfaction surveys online, and they became, the new delivery vehicle for getting to people. Became, the web and the computer at the time, not the phone, but the computer. The company was virtually bankrupt around 2004. This session is titled "Comeback Stories." So, there was a phoenix from the ashes back from 2004. A team led by Michael Gaffney came into the company, and with a number of investors at the time came into the company, and basically righted the phoenix and brought it from the ashes to, fast forward, they went through the downturn in 2009. Where they had clients like General Motors, and at the time, which we still have, are struggling, and they managed to get it through till it was about a sustainable $8 million business, and that was done by a combination of things. One of which was getting into the services side of the business. So around 2005, they bought a mystery shopping company, and the mystery shopping company was selling. Because they believed that the internet was also going to put them out of business. That, and the pitch at the time was, why would you use a mystery shopper to come in and evaluate your operation when you can hear from your real customers, right? And so customer satisfaction surveys and the web, ironically, the same things that had a problem with the kiosk business also made the mystery shopping guys feel like they were going out of business. And so Intouch was able to buy a fairly large mystery shopping company, and and they combined those efforts and were able to bootstrap from there until they had an $8.4 million business, let's call it, and sustainable heading into 2014, with primarily recurring services on the audit and mystery shopping field-based business. And that was a pretty cool story in terms of from nothing to something. Michael actually is still our chairman of the board, Michael Gaffney, but I took over as CEO for 2014. And then the biggest thing that I've done is I've said, that's great, but we need to be technology savvy. We need to not be like all of the other services providers or companies out there that are doing these field work. We need to have a differentiator. We need to have technology. We need to make sure we don't get affected by the next internet, whatever that is. And so we've actually created a whole series of software products very quietly, to be honest with you, over a number of years under the covers. We did do one raise since the inception of the company. Since the IPO, there's only been one raise, and it was for less than $3 million. And that's it. Other than that, everything's been bootstrapped. And we now have that marketing automation piece of software. We have a checklist, forms and automation checklist piece of software. We have customer satisfaction survey software. We have an overarching product that brings all data in, does analytics to provide feedback to businesses. So we've come a long way. And what we do now, people say, what do you do? I say, well, we actually make it so that when you go out to a store, or when you go to a restaurant or a hotel, or when you leave your house, that you have a better experience when you go and do it, right? That's what we do. We're in charge of making sure that our customers, right, who are the people you go to visit, that when you go visit them, you have a good experience and you have a consistent experience, and you go back to visit them, that they have repeat customers and they have customer loyalty, and that they make profits as a result. And that's really what we do. And we do that by a combination of services, feet on the street, doing the in-store and in-site evaluations, and software that we provide that also goes out and collects data, and then combined analytics from all of that is really what we do. We were, to talk about number of employees and things, again, this is a comeback panel. We're now having another one, because all those industries that we serve, have struggled with COVID-19. And so we were forecasted to be well over 100 full-time employees at this time, but we have made some adjustments, and we are now running closer to 70 full-time employees today out of financial prudence. We never got actually higher than probably about 80 or so, 85, and then we scaled back our plans, and we did some attrition as well, just to keep control over the economic recovery. Most of our work, keep in mind, is being done by independent contractors across North America. We have hundreds of thousands of independent contractors in a database that we tap into to do the field work. We have offices in Charlotte, Montreal, Quebec, and Ottawa, Ontario are the 3 offices that we have, as well as a few remote workers in the US and Canada. But that's kind of a little bit about us and what we do. Our revenue for 2019 was $14.4 million.
Thanks, Cameron. That's an awesome overview. I'm going to come back later on and talk about a little bit your history of before you kind of entered the, joined your companies, your tech companies. I think that'll be a cool story to hear some of your bio before that. But let's now you touched supply, Cameron, what you do in your business. Let's dig a little deeper. You have a few products. The way I understand your product, you have this kind of boots in the ground, gathering data. You have you're inputting this data in a database, and you're using your software to help with that. But you've layered on some new software that also helps you now not only gather data but also analyze data. Maybe you can put all these things in perspective. Maybe think of some examples of how each one of your kind of service offerings works and how they work together. I think that would be helpful.
Sure. Take mystery shopping, for example. That's the one that a lot of people have heard of. A lot of people haven't heard of, depending on what you did for a living when you were in university. If you worked in a restaurant, you've heard of it. For example, we might go to an Orange Theory Fitness, and we might have somebody go up and sign up as a member, go through a class, and because they have the free session, and then they'll leave, and they will then go online and do a full report evaluating how that location did against standards. And the difference with mystery shopping versus a customer satisfaction survey is that a mystery shopper is not evaluating what they felt about the experience or whether they liked the experience per se. They're evaluating whether that location adhered to the standards that location has set out. So, if you want every location across your network, every Wawa has to be they want it to be basically the same, right? You can decide whether that's good or bad, but they want it to be the same, and they have standards. So we go in and make sure that people are adhering to those standards, right? Whereas when we also do customer satisfaction surveys where you'll send out links to people and QR codes and all through the website and all those normal vehicles that you get on your phones and your SMS, and people fill in all those survey questions. That's asking customers how they feel about your situation, right? About how they feel about what they receive. So when I'll talk to directors of operations, for example, and I will say to them, and this is the best example to show why you need the services and the software, okay, why you need them both, is that I will go in and I'll ask somebody, okay, you've got all your social media data has come in. By the way, we also bring in social media data in-house. Your social media data has come in, your survey data has come in. All of it says unequivocally, you can't argue that your customers feel your washrooms are dirty. What do you do, right? 9 out of 10 operations people say we tell the restaurant to clean the bathrooms, right? And I always then say, well, what you might have just done is made a worse customer experience in your chain, and which puzzles people. Like, how could telling people to go clean the bathroom create a worse experience for my customer? And the answer is that one thing we do know empirically from data is that if your staff are not happy and engaged, your customer experience is not as good. That is empirical. Anyone who's ever done research will tell you, engaged, happy, committed staff affect your customer experience. Well, what if that restaurant chain had a certain standard for cleanliness? And what if those employees were doing everything they were told? They were following every standard they were being asked and doing everything that people asked them to do. And it just that the standards for the customers were higher than the one from the chain. Maybe it was a capital problem. Maybe they need to spend some money on floor tiles and on walls. Maybe it had nothing to do with the employees not doing what they were told. So all you did was come down on a group of people to do something they were already doing. And that's not going to improve your customer experience, right? But that's what that survey data in isolation would have you do. But if you also have data that tells you whether or not your employees are following your standards and how well they're adhering to your standards, right? You can marry that data and you can figure out how you need to address the problem, right? And so we use the software and the services and combined analytics to make sure that we can actually get what we call actionable intelligence, right, that we give to our clients. And then we've created a tool that's built into a bunch of our software. And it's actually, we have a patent pending technology called action campaigns, where it allows the person to then create a campaign that emails out. So if you, once you get your data and it says, you know, let's say it does say that you need to clean your washroom more, you could send out a washroom cleaning checklist, right, electronically to everybody. Or if it did say, you know what, we need to paint the walls, you could send out a checklist to every single district manager or every single location manager or whoever you wanted, and say, fill it in this checklist. And the checklist can actually make them take a before and after picture, right? The system then allows, our system then allows people to track whether the locations did what they were told to do and figure out whether or not by doing that, it actually delivered a return on the investment. In other words, did it improve the KPI? Right? If your KPI is washroom cleanliness score, did it get better because you launched this checklist? And was it better in the locations that followed the checklist than the ones who didn't? So you can start doing A/B tests, and you can start driving real improvement and seeing whether the efforts that you're making are driving a deliverable on your KPI. And then to take it a step farther, in the analytics side, we have predictive analytics. So you can go in and take a look at what the key drivers are for your metric, and you can go in and say, well, what if I increase this by 5%? And the system will tell you, if you improved your score in washroom cleanliness for 5%, your overall satisfaction score, let's say, would go up by 0.5%. It'll tell you if there's any reason to spend the time on those things, right? And that's all done in one integrated platform.
Excellent. And there was a time where you didn't have that last piece, right? So that you had some stuff going on, but that, I guess, if I understood correctly, previous to this, your customers would take all the data and do stuff with it, or a lot of it, or have to do a lot more with their own data. Now you can do a lot more with their data, and I guess touch the customer a little more now.
Yeah, historically, all of the products were completely siloed, and we provided data to customers who had analysts and who had in the operations, and people just went and they dealt with it on their own. We've created the overarching platform to allow not only for them to do real-time analysis with combined data on our system, but also to bring in data from other systems. For example, we have a client in the petro-convenience space, a large client with about 1,100 locations. And besides doing an audit and a mystery shop and the surveys and everything with us, they also bring in their call center data into our system so that they can see that, you know, which effectively is complaints, right? And they bring in that call center data into our platform so they can see that data in the same place. So yeah, we have that ability now, which is within the last couple of years, that's really been, it's still being fine-tuned, but it's been launched in the last couple of years.
And that's, I guess, I would assume you could provide a more stickiness kind of relationship with your customers, which is nice. So it's nice though. So now you're all, what's pretty cool here is you're kind of not all, when I first looked at the company, it was like, you're only about just taking what the customer wants, but you're really, this is more than this. What the customer wants, you know, standard operating protocols, our company's following, you know, the right protocols, anywhere from even regulation too, right? Regulatory needs. So in COVID-19, that may be great. We can talk about later, but it'd be pretty interesting actually. But it seems like, well, we can, I guess, do it now. I mean, why not? We're in it. So when we look at COVID-19, you know, you're doing some things that, you know, these companies have to do. They're going to need your services, right, to some degree.
Yes, we're at an interesting axis, right? On the one hand, you know, the concept of customer experience measurement and management, you know, knowing whether people feel safe, for example, is probably more important now than ever. You know, you're seeing a growing market space. You know, it's already an $8.5 billion market, you know, driven by the U.S., and it's growing, and all forecasts are it's going to continue to grow at compounded rates of, you know, more than 15%. And because you still need to know if customers are feeling, you used to be happy, now we're almost looking for safe, right? You know, I was talking to one client recently about some study results we did with them, and you know, whether they saw someone cleaning the pin pad, whether they saw hand sanitizer available in location, whether they saw someone in their location cleaning, actually affected their overall satisfaction with that location more than, you know, the old things that used to matter, like courtesy and smiling and, you know, availability of product, right? And it's because of the concept of people's personal safety right now in these challenging times. And so it makes sense. If I drop you in a dark alley in a really nice neighborhood, right, at 2 in the morning, or I drop you on a well-lit street at 2 in the afternoon in a bad neighborhood, you're probably going to feel safer on the well-lit street. You're probably not safer, but you're going to feel safer. And it's the same with, you know, with operations. So we're right now doing a number of studies around, you know, COVID, around the, you know, it's not, we're not going to see if people are smiling, because you can't smile in a mask. You know, smiling with your eyes is hard to measure for. So, but we are, you know, are there floor signs? Are physical distancing measures in place? You know, what are the manifestations that we can see of the operations? And again, because we check their standards, you know, we can check to see if their people are executing what they've told them to, and then we can measure to see if that's enough for their customers, right? Are their customers feeling safe? Are they feeling good about going and shopping there? Which will obviously, you know, gets that economic reopening happening faster. Right. So we're absolutely morphing on that. The challenge with it right now, of course, a lot of our clients is that they're struggling financially. Right. So on the one hand, what we need, what they need from us is probably more important than ever, and even growing. On the other hand, you know, we do have to work with them as time goes on, as their economic recovery allows them to afford the things that they need too. So what we're seeing is people switching sometimes to software. You know, if the services are a little more expensive, they're relying a little more on the software and their own teams, and planning the services a little bit farther out. And so we're working with our clients, you know, with an economic reality in mind. But what we do is so much more important than it ever has been, because we also do compliance around age verification for alcohol, tobacco. You know, for example, whether it's for a manufacturer where we go out and make sure that they're not getting in trouble with the FDA, or whether it's for individual chains to make sure that, you know, if they go to court because they're selling to minors, that they can show that they're doing everything they can and that they're actually a responsible retailer. You know, we work on the age verification side for alcohol and tobacco. We do pharmaceutical drug rep audits, where we actually enforce the PDMA, the Prescription Drug Marketing Act regulations, and we go out to companies and do annual audits to make sure drugs are stored properly in their houses, and that they have the drugs they're supposed to have and they're not missing. And so, you know, we do a lot of things that that have to go on to a certain degree at some point, even if it's delayed, regardless of COVID. And we also do a lot of work now with health and safety type of measures in mind and customer experience in mind. They're more important than they've ever been. But there is some lag in timing of the financials of the people who need to do the work, right? But we're actually, that's why we're looking forward, and we're seeing a huge potential as the economy starts to rebound.
You're also, you know, making sure that companies have the right inventory, controls and pricing and branding. So I'm going to be right from that point of view, too, right?
Yeah, we anything you can go and audit, we go and take a look at.
Excellent, awesome. Thanks, Cameron. So James, let's take it back to you here a little bit and learn more about what your company does. You know, people think of lighting as lighting. You know, it's a commoditized industry. What really is it? Can there be can you create a platform company from a lighting point of view? So I think maybe go into, you know, what makes your company so different in the lighting industry, and you know, you look at yourself, I think, as a platform company to some degree now, as opposed to just a product company. I think you made that point a lot. And, you know, and then give some real life applications of how your lighting, saves companies money, as well as it maybe improves productivity of employees.
Yeah, I think what Cameron was talking about is quite relevant, you know, for what's happening right now in our industry as well. I mean, obviously we focus on mainly commercial industrial facilities, you know, government buildings, you know, hospitals, schools. I mean, these facilities are not as well occupied as before, to say the least, right? So their demand is also changing. Their needs are changing. Just like what Cameron was saying, the retailers, you know, their customers, they have a different need. You know, the priorities are different, right? So obviously we're very excited that we have launched this InFocus control platform that, to your point, you know, it's gonna make people more productive, more comfortable. It would, start impacting organizations in different ways other than, you know, just energy cost savings and sustainability. It would actually, what we call, you know, we follow what we, you know, everything we develop and market, we follow this triple bottom line principle, which is financial, environment, and human, right? And so that InFocus platform, you know, in a nutshell, enable existing buildings to provide lighting controls, which much less cost and complexity than any, control systems out there, wireless or wired. We're talking about a fraction of the cost and the complexity to enable control. And so now you can manipulate the light spectrum, the color of the light, the lumens of the light, from your switch. You don't need to have any wireless protocol. You don't need to have any wire line. So we launched this about 2 months ago, and we expect that to be a platform going forward. You can start measuring, temperature, occupancy and everything in the buildings through this system. On the other hand, COVID-19 happened, right? So we launched this product and we got great receptions. We have, I think at this point, we got interest from over 30 countries already, before we even started shipping the product in September. So very great receptions. On the other hand, what people are really concerned about now is, is it safe to be back, right? And how do I plan my facility with, post COVID-19? How much more people, how much less people I'm gonna have, and what are the things I have to do? And disinfection becomes the top of the concerns, right? How can I make sure that people feel safe being back to the facilities first? I mean, to have a facility to run, for us to save energy, for us to make the people feel more comfortable, more productive. Before that, they have to be back, right? So we have always known lighting, UV lighting, and all that. Our chief scientist John Davenport, who was the head of R&D for GE Lighting, in the past, had a pretty extensive experience in UV lighting and in lighting overall, obviously. So we were very early on, to get into this field. Back in probably late last year, early January, we started to look at how we can incorporate UV disinfection into our product. And fortunately, we got this InFocus platform that will now enable existing buildings to provide controls immediately. All we have to do is to add on top of that, our lighting fixtures, now integrate the UV disinfection functionality into the general lighting. So you can get into buildings and replace their lighting fixtures immediately without putting all this control, without commissioning and designing, and that make this UV disinfection capability much more affordable and simple. And that has been a focus for us, and we are actually developing a couple of different product lines within that UV disinfection portfolio. We have to make the changes because of what COVID-19 is making. The kind of impact it brings to facilities are profound, right? So we are also not necessarily pivoting, but we are adding on top of what we are providing for the most urgent needs of buildings. If we don't solve the safety and health concerns, then the rest is not gonna be on top of the mind of the facility managers.
And do you have any, typically on the spot, I didn't just thought about this. Do you have any statistic to tell you, like, how much money, like when an investment in LED starts to pay off first, because when you take all the retrofit costs into
right. So
I guess InFocus reduces that cost too over time.
Yeah. So that's a very interesting question, because there are different ways for you to save money or produce financial impact for the organization. So as I mentioned, in the first 100 years of lighting, it's all about giving out light, right? It could be incandescent, and fluorescent is about 4 times more efficient than incandescent, which is why they started to replace all the lighting in basically in enterprise buildings, right? You go to schools these days, hospitals, office buildings, they are mostly fluorescent lighting. Even today, you've heard of LED for 10 years, but still most of the buildings are still lit by fluorescent. And they started to come into place in the 1940s and 50s. So it's become an institutional lighting choice because it's 4 times more efficient. And LED came along in 2010 or so in commercialization. And it saves another 50% today, right, against fluorescent. So now, we can save, every time you do the retrofit, just compare with fluorescent, you are saving more than 50% of the energy of fluorescent. And if you look at the payback of the investments, it depends on the operation, right? You have a hospital that runs 24/7. You have schools that runs a quarter of the time on an annual basis, right? So that payback becomes a pretty wide range. But if you look at Cleveland Clinic, which we did the retrofit for, just on the not accounting for the maintenance savings, their payback is less than 3 years, right? But that's only on the energy side, right? Now there is actually a rule of thumb in terms of facility spending published by JLL, which is one of the largest property manager in the world. So JLL has a rule of 330 and 300, which says that organization usually spend $3 per square foot on energy on an annual basis, and $30, and this is in North America, obviously, $30 on rent and about $300 on people cost, right? So in that $3, lighting is usually 20%. So on an annual basis, let's say on rule of thumb, 60 cents are spent on lighting. Now we can cut that in half, right? LED has been doing that over the past 10 years in a way. And that's the whole story about LED over the past 10 years, unfortunately. So you are saving 30 cents per square foot for buildings, right? While there has a lot of studies that showing that if you provide circadian lighting to occupants, you improve learning, you improve productivity by over 20%, sometimes 30% or even more. In nursing homes, you prevent falls, you prevent deterioration of cognitive functions. You have all the things and you improve sleep, right? All these things are impacting that $300. Let's say if you save, actually you make your employees just 1% more productive, not 20%, right? All the studies showing 20%, 30%. If you improve just 1% of your people cost, that's $3. That's 100% of all the energy you spend in the building, not just lighting, not just half of the lighting, but 100% of your energy savings. If you improve 20% of your productivity and students learn 20% better under circadian lighting, you are making $60 in impact on that people cost, right? $60 on an annual basis. And that's 200 times of the impact that LED lighting can make on the energy efficiency side. 200 times, which is why I said that, we are we're in the forefront of this whole human-centric lighting push to make lighting far more impactful than simply energy efficiency, right?
It's more just a light bulb. You're
right. I would say the question is, how many technologies does it take to make a light bulb better, right? Yeah. And it's a lot. If you look at InFocus, right, there is obviously lighting, there is electrical, there's mechanical, there's electronics, there's software, right? And at some point we're adding cloud. We are very cautious about adding cloud. Because most of our institutional customers like Cleveland Clinic, Navy, or big universities like Penn State and all that, they don't want security issues. They don't want those wireless complexity in their buildings because they're very concerned about cybersecurity. But sensor, for example, is definitely on our next generation. So you've got all these technologies coming together that make the lighting a lot more productive and impactful for organizations, and that is the most exciting thing. And then going back to what's happening with COVID-19, right? Now, instead of having an organization to specify what type of disinfection lighting they need, UV, where do you put the UV disinfection device in your buildings? That's a question, right? Where do you put it? And there are some people that are using, for example, those blast UV light that you can only do that when nobody's in it, right? Because UVC, which is the most effective one, that's the only effective spectrum that could kill the viruses. They also hurt your skin, obviously. It hurt your eyes, right? So people cannot be inside. So when people are inside, how are you gonna disinfect the space? Because that's when people are inside, right? You want to protect the people inside. Yeah, I mean, it's important to clean the surface, but I don't know if you hear that, but it's been proven that viruses are passing through aerosols, right? It's literally little droplets hanging in the air, and it's passing through the air, right? It stays alive in the air for hours. So you have to disinfect them. So how are you gonna do that? You know, in the spaces, you know, you know, we have this InFocus platform that you don't have to have designers come in and say, where do I put the UV machine, right? You just replace the light, and it has the fan that throw the air into the space and then disinfect the space and you know, distribute them, not distribute the air in the space and circulate the air, right? So it's we believe that it's one of the most effective way to keep the air clean from virus. And there are a lot of studies that have shown in the past that it effectively reduced the virus count by 20, 30, 40%. Obviously, we are launching this product in Q4, and you know, we will have to do lab tests and all that to show how effective it is. But obviously, also, you know, subject to factors like how many people are getting into the room and how the air conditioning works. You know, how many air changes it happens in the room and all that. But we are able to disinfect 99.99% through the chamber that we have in the lighting fixture. So, and then we have an additional product we're developing on the UV side as well. So that's all about lighting, but lighting is doing a lot more than giving you light and making the light energy efficient. And that is, you know, what we are positioned for.
Maybe Donald Trump will give you another UV, another endorsement again, going in the fourth quarter like he did earlier in the year. But so Cameron, it seems like the two of you have a little bit of potential stuff that you could do together. Maybe you know, Cameron, maybe you want to chime in. Is there an opportunity to really maybe even work with Energy Focus in the future with some of the warm handshakes and maybe building a relationship?
Yeah, I mean, you know, we measure whether people are happy, right? And we measure whether people are following standards, and we measure whether people feel safe, right? So to the extent that, you know, that James's group is out there working with clients who want to know the impact of what they're doing on how their people feel, right? For example, what I found interesting with what James was saying was the human side of lighting, which, you know, I'm not lighting, I don't really think about it. I do know that I don't like fluorescent lighting.
Nobody does.
Well, yeah, you're right. Nobody does.
But by the way, this is why you don't see that at home. I mean, you will wonder, is it more efficient? Why are people not putting it at home? Because it's not, you're not comfortable.
Well, you see it in home sometimes, and I don't understand it. Yeah. But, you know, and so to hear the human side of lighting, where you can use, you know, an LED to graduate, I think that's pretty cool. From our standpoint, where we would, you know, work in that environment would be where somebody has either looking whether it's worth making a change. So for example, we could survey all the people who work in a hospital or a nursing home or in a company and say, you know, is it a big deal? Would they like to see better lighting? Is this something that bothers them? Do they have concerns? We can do those types of surveys and studies. We can also do, after an installation has been done, we could go in and find out, do people feel more productive? Do they feel better? Do they like what are they happier? Are they, you know, enjoying it? We can also check to make sure the lights are actually working and that they're doing the things that they say they're supposed to. Because once you've installed them and everyone goes away, you know, at some point somebody needs to go back and do a bit of a physical audit to make sure that things are still there, still working, still functioning. So yeah, we can certainly, we can engage on any of those types of fronts.
Excellent.
Yeah, I would agree. I think obviously Cameron's company does a lot more than, you know, doing, for example, lighting survey, but I think they will be a great, we will be a great, I think, customer for them to actually make sure that this is actually making the impact we think we're making for the customers, right? I mean, we think they should. And I can tell you that we start getting our own products, you know, we install in our own facilities, right? And even the people, our own employees, they put in their own offices and all that, and they feel the differences, right? And in the end of the day, we set up the company as we call it you know, you were asking, you know, how do we differentiate from our competitors? It's actually like very similar to what Cameron was saying. We have to ask the right questions, right? What are the real needs of the customers, right? And you go to the sort of the root cause or the first cause of the problems, right? And then you develop technologies around it, right? And the main thing is to truly understand the needs of the customers. You know, and so I think that there's a lot for us to continue to learn, so we can develop products that are truly impactful, right? And I think it goes back to the issues in the lighting industry, where there has been a disconnect between the lighting developer, the manufacturers, and the end customers, right? Because over the past decades, you know, technology hasn't changed much in lighting until LED came along. And sure enough, when LED came along, all these biggest lighting incumbent companies are gone now. You know, LED, you know, from GE, Philips, Cree, they all sold off their lighting businesses. You know, they got out of the space. You know, because they don't, you know, over the decades they just lost the touch with customers. You know, and with technologies changing so fast, with so many what we call exponential technologies, right? From software, sensor, you know, electronics. These are exponential technologies, meaning that they change very fast, right? They follow the Moore's law, you know, which means, you know, the speed, you know, the processing speed almost double every 2-3 years right now. So that kind of speed, with the kind of possibilities you could come out with for products to solve people's needs, it's absolutely critical that we understand what the customers' needs are and how to make products that vastly improve their lives, right? So I feel that there's a very, you know, close, you know, sort of philosophy in terms of understanding customers, truly understanding the first causes. Yeah.
And maybe we have a connection here. Well, let you guys handle that later. Get your own room and talk about it. But so I want to. So this is, we don't have a lot to left. I'm going to try. I still want to get a few things in, like, you know, risks to the company, liquidity. But look, this is you know, management comeback stories, and I think what's interesting here is to maybe get a little bit of background on both of your experiences in business and with the company, and you know, you both touched upon a little bit. So, you know, James, you have an interesting history with the company. You've been here once before. The stock did really well. There was some issues you had with the company. You left and then you came back. You had skin in the game. I think, Cameron, you got some skin in the game. You have a lot of it. You know, you have some ownership in the stock. Yeah, you faced some challenges also when you were trying to develop your, you know, your marketing strategy didn't work out right away. That's a challenge I kind of want you to talk about a little bit. But you got through it. And the really important thing here, and if everyone listening here, is that both James and Cameron got through a lot of these challenges. That's what's really important. Yeah, and I'd rather invest sometimes in a CEO that's already gone through a challenge and solved it, as opposed to going in, you know, not really knowing if they're going to get. And I've done that, and it's, you know, 50-50 sometimes. And, you know, a lot of times I failed at that when I thought I had the right CEO, but I just from understanding them, but not through practice, and it's kind of hurt some of my investments in the past. So we're here with you, James. Just want you to give us, you know, as quick as you can, your background, right, a little before EFOI, and how you got involved the first time, why you left, some of the changes that went through the industry, and everything. Try and make it as quick as you can. I know it's a lot of stuff there, but see if you can do that.
Yeah, that's okay.
Bobby's going to come over. Bobby's going to fly over here to Florida and clock me in the head. So
right. Yeah, I'll make it quick. But I spent 15 years on Wall Street as an analyst and portfolio managers, and I fell in love with the whole, you know, I think sustainability clean tech space in 2011-12, and I became an investor in INXSF first. I feel that at that time there were a lot of opportunities for us. So I came in 2013 as chairman and CEO, and restructured the company. And as you know, Marge, you're familiar with our story. We grew sales by I don't know, almost 20 times within 3 years, and the stock did well, and we did well. And in 2016, our military sales came down. Because we grew too fast, and I always, in hindsight, I always said that we could have grown like 5 times in 3 years, and people are not going to complain. But we grew very fast, and so there was a steep drop in the military business in 2016. I had a disagreement with the board at that time where the company should go. We were sticking to we are building our commercial sales pretty well at that time. And we are targeting the large customers to build the brand awareness. And you know, and we were very you know, sort of thin into our product line at that time, so we had to be there and talk to customers. Otherwise, the distributors and contractors, they're just not interested in a single product company. At that time, we were very much in the tubular LED only, and the to replace fluorescent. And we don't have a vast product line to supply all the needs as well. So anyways, you know, fast forward, I left the company. You know, the strategy that the board at that time thought would work obviously didn't work. The company lost over $20 million in 2 years I was away. And then I would stay as an investor, obviously, at that time. I supported the management at that time too, you know, if they need my support, but took a different strategy and really was not doing well. So I came back in, you know, last year in April to, you know, change the board, obviously, change the whole management team, and restructure. And we were able to start growing fourth quarter, the first quarter this year. And this time, I think what's most exciting is that timing is even better than the first time I got involved. The first time I got involved back in 2013, think about it, at that time LED just started to happen, and which is why Navy was a big customer at that time. They were early technology adopter. Now LED, nobody's gonna say, I don't want LED, right? And why do I need LED to replace fluorescent? The question is, why do I choose energy focus, right? And now with the product we're developing, this is why the first thing I came back, you know, we focus on developing InFocus, right, which is the lighting control platform, because that's what we know, that's the biggest pain for our commercial customers. You know, I mean, for existing buildings, there was just no way to provide lighting controls affordably. You know, which is why you go to schools, hospitals, none of the lighting are smart lighting. Why? You know, you would think you've probably heard of smart lighting for 10 years now, you know, but it's not happening, you know, because they're too expensive. They only happen in the high-end residential buildings, some commercial buildings. This is why we call it, you know, where InFocus is providing human-centric lighting, which is HCL, for the 99%. So, you know, it's really for the 90% of the buildings out there, you know, so that was a very big breakthrough for us. And we obviously won the Energy Environment Award as well as a top product of the year just a few weeks ago. Because of that, the impact it could make for existing buildings is huge, right? And if you ask me why, you know, I'm very excited this time, even, you know, even better, timing wise is better. You know, what I have learned as in Wall Street, you know, when I was an analyst, you know, I look at probably 100, 150 companies every year, right? So I basically spend most of my time talking to CEOs, not being a CEO, but, you know, talking to 100, 150 CEOs a year, and I would pick probably 3 companies to invest, right? So I have very high standard when it comes to CEO, you know, and when it comes to management team, which is what I hold myself and my whole team accountable for the highest standards we could, you know, meet. And I think that would enable us to thrive in this very chaotic environment, right? We have to be very vigilant about what's going on, what's changing. COVID-19 is not a great example. Lighting industry itself has gone through a once in a century change, right? Imagine the biggest lighting company are all gone today. That's pretty amazing. You know, it's pretty much like typewriters company all gone, replaced by the PC manufacturers, which is very similar actually from analog to digital. That's how lighting is changing. So we're very excited, and I think we still have a lot to learn. It's just never, you know, you never stop learning, you know, because there's so many new things, and our customers expect us to continue to bring the possibilities to their facilities, right? And I think that's what the big companies, the big lighting company, failed to do, and that's what we are going to be pursuing.
So James, real quick, then before I sign off on you and take the, and with Cameron, I'm really liquidity needs. And now you raised some money in 2009, was it 19 or early 20? I forgot.
Yeah.
Not to talk about that yet, but your balance sheet, how does it look right now in terms? Are you able to get through, you know, COVID-19 in this next stage of growth strategy without having to, you know, I know you can't make predictions and guidance stuff, but
yeah. I'll
raising equity capital versus maybe other types of capital.
Right. Obviously, you know, we were able to raise equity at when the stock price was not very high, and we we were able to raise a higher valuation. And our preference is absolutely not to tap into the equity market and in the next few quarters until we demonstrate much stronger growth. We have a pretty, we have additional credit facility that we have been working on that we believe will be able to provide the liquidity we need. The other thing is also depends on how fast we grow, right? I mean, our break-even line is probably around $7 million, and last quarter we did I think we are
$7 million per quarter. On a quarterly, yeah. Okay.
On a quarterly basis, right? Now we can be profitable if we don't want to grow right very fast. We are military businesses, good margin and all that, but it's all about growth, right? And so again, but as I said, we don't want to grow too fast, but we want to grow relatively fast, and so how fast can we approach that $7 million sort of that break-even line? That's what we are aiming for, right? So if you look at the our projections about the third quarter, between $6 to $7 million, you are actually not that far. so suddenly you are not that far from losing. From when I took over, we are losing over $2 million a quarter.
But now you have some sales that got pushed in the third quarter from Q2, helping that Q3 out, right?
Right. But so the key is that can we continue the growth pace?
It'll be interesting to see though if you do reach profitability in Q3 when you have that revenue line.
I wouldn't say profitability, because we are not making any guidance, right?
Sure.
But if you look at our fixed cost, it's not difficult to see where we need to be, right? So what I'm saying is that the liquidity concern is not as huge as we were before, right?
Great.
Yeah.
Thanks, James. So Karen, why don't you start with the liquidity question when we go on, and then move into real quick, the challenge you faced, maybe the sales process we talked about, or any other challenge you might have faced with the company even before you were CEO.
Sure, no problem. I think we're pretty tight on time, so I will go pretty quick through here. Liquidity-wise, and I can provide some guidance here because we did in our MD&A from our Q1 release. We do not expect to require any outside capital to get through the COVID-19 situation. We have zero intention of raising at the current prices in terms of our current situation. Now, would we raise money in the future? Sure, but that would be for something not because of COVID or operating needs. That would be because of something cool that we wanted to do, like buy something really large or an acquisition or something. You never know. But as it sits from an operating standpoint, we don't need any outside cash. Our balance sheet is solid. We do have operating leverage. In that, last year we did 14.4 million in revenue. We delivered 1.1 million in EBITDA, and we actually turned an actual profit as well, just over the line. And that's financial management. We could have made more, we could have made less, but we're bootstrapping. So we're investing the money we have available and the profits we have available in order to continue to push the products and the growth and the marketing and sales forward, right? We can pull that back when we need to, right? Like this year, obviously, sales are going to be much more challenged, particularly in Q2, as everyone knows that all the industries we serve shut down for a quarter. Now they're coming back through Q3 and Q4, and we'll pattern that growth with them. But we're able to control our cost and structure in such a way that we don't need money for operating revenue. We have a lot of things we can pull back and forth in terms of how we run the business. So from a liquidity standpoint, we're fine. Our challenge is, that we have, you talk about the marketing, you can have the best thing in the world, but if you don't tell the right people about it, it doesn't really matter. And, when we first came out with our overarching platform, we had a plan on who we were going to sell it to, how we were going to sell it, where we were differentiated and where we would win. And unfortunately, some excited people in charge, kind of followed the leads that came to them instead of driving the strategy forward. The things that came off the web became what we chased instead of going after where we would win. And as a result, I had to restructure the entire sales and marketing organization which was successful. We went back to focusing where we should be focusing. We saw 29% growth last year. We were expecting to have that type of growth again in 2020, pre-COVID, including acquisitions that we had already lined up and had press release. So we were, we kind of got over the hump from our initial marketing and sales failure, and we figured it out. We got over the hump, and COVID's hit us. So now we're in a bit of a recovery with the economy, but we know what we did right last time, and we kind of know where we need to go when the opportunity's here. And as I said, things are still important. I was actually ran sales and marketing from 2011 to 2013 in Intouch. So then I became CEO. So I do know a little bit about it, but unfortunately or fortunately, as your company grows and as you start to scale, you put people in positions, you have to trust them to do things, and sometimes you have to reset. So we did the reset. It worked. Now we're dealing with COVID. We will continue with that reset. We have every confidence that we will continue to go as soon as, as the economy comes through 2020 and out into 2021, we expect to pick up where we left off at some point.
I think you also made some, I'm sorry, go ahead.
No, I was just going to say, you talk about CEOs. I don't talk about myself I don't consider myself a CEO as much as an entrepreneur. I grew up in family businesses from when I was very young. I have run significant divisions for Mars, PepsiCo, and Unilever. So I grew up in small business. I have run divisions for massive corporations. And I own 10% of the company that I run now, which is cash, which is not, and I wasn't given any stock. That's cash in. I bought in off the market for almost all of that stock. As when I took over, and when I took over CEO is when I did it, because then I wanted to have control over what my money did, and I've bought since then, since I've been CEO. And so to me, I don't look at my role in a company this small, as being a CEO, right? I'm an entrepreneur. My job is to build a business. Right? My job is to find ways, no matter, it doesn't matter if it's COVID, if it's a marketing failure, it doesn't matter what the next problem is going to be. The job of the entrepreneur is to figure out how to get over that barrier, right? How to overcome it, how to get around it, and how to keep the company going forward. You're going to have ups and downs. You're going to have starts and stops, but your job is to be the guy who gets it there, right? And that's an entrepreneurial focus, which I believe in our size bracket is what's required, as opposed to, CEOs who have a lot of staff and a lot of process and a lot of procedures. So,
and I think actually though, you actually, when you first came on board, as CEO or as entrepreneurial CEO, you made some organizational changes beyond the sales part too. There was no structure at all in your organization, right? You brought a lot of it. I think you brought some of that structure a little bit.
Yeah, the best way to put it would be that the company is being run in a very kind of what I would call in a structure that was a hierarchical structure, right? Which is a valid structural choice for many organizations, and it works quite well. But in a company that needs to be quick and responsive, and it needs to change and follow trends and kind of catch up with markets, hierarchical structures just create barriers, right? It just doesn't work. And so one of the first things I did was I put a matrix structure in place where we separated who was responsible for what we did and who was responsible for how we did it. And we broke down all hierarchical lines of reporting in terms of structure, and became a team-based culture. And it's worked very well for us.
And so one last thing, I just want James, want everybody to know that James actually invested in the company too. In both times that you came on board to Energy Focus, you put a significant amount of investment in. So I love that about the story, is that both James and Cameron have personal skin in the game, and so that's awesome.
Yeah.
James, how much do you have invested in the company now in Energy Focus now?
Yeah, I own close to 10%.
Okay, great.
So I think, what Cameron says is absolutely true, right? I mean, in a small company, you have to be entrepreneurial, because the environment is changing faster and faster, right? And I don't know how a small company could even survive without being entrepreneurial, right? It's impacting every company, and this I think this COVID-19 situation is expediting all the changes that would have happened, at some point. right? And it's a wake-up call. But it should be also an opportunity, you know, for the right minds, for the people, the companies that can respond to the changes. So this is the ultimate test of entrepreneurship.
So excellent. Well, thanks. I know Bobby's giving me the evil eye up there, but I just want to thank James. Well, actually, Bobby for letting us do this today. This is a great thing you did. Cameron, I'm glad you on short notice you took the opportunity to do this. And James, as always, it's been great, you know, getting to know you over the last few months. If there's any, now we only have so much time here to talk. James, you can see more about James's growth story, what he's done by going to littlegrapevine.com. That's littlegrapevine.com, and you can see a presentation, a virtual presentation that James did on that site, as well as a Q&A session, a pretty in-depth Q&A session that where I was asking the questions to James about the company. And Cameron, thank you also for being here again. And if you want to know more about Cameron's story, you can go to geoinvesting.com, where I actually did myself a small virtual pitch on the story, as well as I could, understanding the story. Not as deep as I wanted at the time, but I do now, more now. But I think it will give you a pretty good insight into what Cameron's doing, and some more about the risks in the industry and these kind of things, and more about the business lines. So that's it. Thanks, Bobby.
Thank you all for joining us. Really do appreciate it.
Thank you.
All right. And wait, before everybody leaves, Maj, real quick, just to make sure, quickly disclose whether you're currently a shareholder in both companies.
Yes, I currently own both stocks, and I'd like to potentially buy more as their turnaround plan continues to unfold. So, and I see results of that.